Well, it's an exciting time right now. So we are in the midst of the Restaurant Revitalization Fund ramp up, and there are a ton of webinars that are going on right now, and I highly encourage you to attend as many as you can. Some are duds, some are great, but I think anyone from the SBA, you're going to want to be on those sites. Just be forewarned that I think this is going to be a lot like PPP, where there's going to be more clarity that comes after the program is launched than before. So they're doing the best that they can. And I'll show you some resources that you're going to want to tap a little bit later. All right, so 28.6 billion, they finally gave us the breakdown of this. So grants up to $10 million. There's some new pieces of how they broke the money up. So 500 million was set apart for applicants with revenue of $50,000 or less. So I'm not sure how many people are going to be in that bucket. I don't suspect there's going to be a ton. 5 billion for applicants with revenue of $500,000 or less, and then 4 billion for applicants with revenue of 1.5 million or less per year. And believe it or not, that comprises about 90% of the industry. So that one bucket, 90% of the industry is going to fit in that one bucket. So that one's going to fill up and be gone in a matter of minutes. So
Oh, Rick, it looks like we lost your audio.
I guess I must have hit my little controller with my finger. So you did hear that they've set these different pieces aside here in 19.1 for the eligible entities of different sizes. Doesn't matter how big they are, but if you're a larger restaurant, you are going to be limited to $5 million per location. And that comes into play with some of the ways that things are grouped together. For example, food trucks. So good faith certification, this is a question that lots of people have been struggling with. Some people have more money in the bank than they had before they went into the pandemic due to being shut down and government programs and doing a little bit of to go. They've figured things out. So one of the questions that I've gotten a lot is, should I take the money? And my question is, do you have uncertainty around current economic conditions going into this? Someone asked me that question the day before Pierce County got thrown backwards. So King County's on the cusp of it right now, perhaps other counties as well. So I would say that there is a lot of current economic conditions that are uncertain. One of the people that I listened to on one of the SBA sites said, because someone asked that, should I take the money? And they basically said, well, it's up to you, but you should ask yourself the question, have you gotten back to your 2019 sales levels? So something to keep in mind if you're above, if you're getting back to that point, you can think about that. But I would say that the vast majority of people have not gotten back to that point unless you've got a large company that probably doesn't qualify anyways. So you haven't received a loan under the Shuttered Venues Act, and that there's an initial 21 days priority to small business owned and controlled by women. That's got to be 51%. Veterans got to be 51%. Social and economically disadvantaged small businesses. And they're really looking for Black American, Hispanic American, Asian American, those small economically disadvantaged businesses. So there's a pretty good group of them. So those are going to have priority in the first 21 days. And I will tell you 1,000 times that the portal is going to open day one to everybody. And they want everyone to apply day one. So do not wait until day 22 to apply. You apply day one, minute one is what the SBA is asking, which is going to be great to watch. So $10 million, $5 million per location. And this really comes in when if you're a caterer and you've got several different catering businesses that go out, not that you're doing a ton of business right now, but perhaps you are lucky enough to do some in excess of 5 million because you've got a number of outlets. Those all have to be grouped back to the kind of the corporate office side. So that may come into play. We do have one client that is going to come into play with maximum $10 million as a group that you can receive. and affiliation rules apply. And we're going to go over that a little bit later. So no more than 20 locations and not publicly traded. And it's got to be pandemic related revenue loss. And it's 2019 minus 2020 minus PPP loan amounts, and overestimates must be returned. I don't see that ever happening unless you're not able to open anytime soon. So they have extended the deadline to 3/11/23, which is just a godsend. Eligible entities, I think everybody's probably seen this list, but it's primarily restaurants and anything to do with food and beverage as a main source of revenue. So 33%, you see all the asterisks, those are for products that or providers that need to have at least 33% of their sales coming from food and beverage on site. So golf courses are not included in this group, by the way, but things like tasting rooms for wineries, 33% has to be on-site inns, 33% have to be on-site sales. So it doesn't count your wholesale. As you ship those out, you've got to make sure that your on-site is at least 33% of your sales. So ineligible, state and local government, publicly traded, as we mentioned a second ago, Shuttered Venues Act grant, if you've received one, if you've applied for one and you want to go for RRF, you've got to withdraw that. You cannot have both of those applications in play at the same time. You may lose them both. So be careful around that. And you can't be permanently closed. And there's some definition around permanently closed, because some people closed, they thought was going to be permanent. Now they've come back into the game and said, you know what, there's some grant money available. I think I can make a go of this because it can help with my rent. It can help with my expenses. So if you are contemplating reopening, you would be eligible for this. All right, so calculating the grant, a few different buckets here. So 2019 sales, if you're open all of 19 or before, minus 2020, minus PPP loans received. If you're not open of all of 19, you take your 2019 monthly sales. So if you were open 1 month, for example, you would divide that by 1 and multiply it by 12. So 3 would be divided by 3 times 12. So average monthly sales minus the 2020, average sales times 12 minus the PPP. So the next bucket is if you're open in 2020, it's eligible expenses minus sales. And then if you're not open at all yet, it's really your eligible expenses as of the date of application. And there's some people that, you know, you're not open yet, but you've spent money on legal fees and you've started hiring people. And there's some expenses that are not capital, because this does not include capital expenses, for example. So it's not to build out your new restaurant. They're not going to pay for that, but it's for those other funds that are in between there. All right.
Rick,
so
we had a question come in that kind of related to that. So I'm going to jump to that one. What if a business had higher revenues in 2020 versus 2019, but their profit was negative? They produced a hand sanitizer and lost a lot of money on it, even though they sold quite a bit of it. So 2020 revenue looks good, but they had a huge loss for the year.
Not eligible. Specifically called out by the SBA. If this is a sales calculation, you would not be eligible for the grant. Thank you for the hard work and for supporting the community. Unfortunately, that disqualified you for the grant if you were in excess of 20 sales of 2019. All right, business uses of funds. I like this summary. This is from the SBA. It's from a webinar I attended the other day. I've got a very, very detailed one that comes out of the program guide. And I'll show you where that is a little bit later, but I like how they summarize this because it's pretty clean. So business expenses, basically everything that it takes to run your restaurant. It's pretty simple. That includes your legal fees, your marketing fees, your accounting fees, POS contracts, all of that stuff. So basically what they've defined business expenses as is kind of your day-to-day activities. So capital expenditures are not your day-to-day activities, but the day-to-day activities of buying food, beverage, all of those kind of things, paying your bills, those are the business expenses that they want you to include for the use of funds. Now, you're going to have to keep good records of this. If you don't spend it all by the end of 2021, you're going to have to report on it. We don't know what that looks like yet, but you will have to report on what how much you've used and how much you've used on what. I suspect it's going to be in different buckets. Tell us how much you spent on supplies and tell us how much you spent on cost of goods and tell us how much you spent on utilities, but we don't have any guidance on that yet, but we'll get it. Construction expenses. This is not, I've gotten several questions about, expanding their remodeling, all of those kind of things. They came out and said expansion costs are not eligible for that. They're ineligible. But it does not mean that you can't fix things up in your facility and get them ready. If you need to create a little more space around social distancing and buy some different PPE and all of those kind of things to protect the guest, completely expect those to be eligible. Construction outdoor seating. So great opportunity to expand your outdoor seating and have the government pay for it through this grant. On the business debt side, lots of questions around this. Payments of any business mortgage obligation, both principal and interest. This does not allow you to prepay things, as some would like to just completely prepay them, or they'd like to pay things off. This is really about paying your monthly expenses as you go. But if you had, for example, a balloon payment that was coming up during the next couple of years, you can use this to pay for that. At least that's one point of clarity SBA has provided already. So that's very, very good news. Some questions have been around, can I use this to pay my PPP loan that didn't get forgiven? Yes, but you can't prepay it, only the expenses that are due during the period. Same with the EIDL. So generally, the government has been frowns upon paying government debt with government debt. And in this case, the SBA has been asked several times about PPP and EIDL. And they have so far said, yes, you can use this money, this grant money, to pay those debts during this period. They really want you to revitalize your business. This isn't a rescue fund. This is a revitalization. So whatever it takes to pay your daily bills, they want you to be able to use this grant to do that.
We have a question about that last slide.
Yeah.
If they have broken down equipment, such as a freezer that's too old to be repaired, according to the refrigeration repair company, can we use the RRF to replace it?
I would say at this point, be very conscious about anything that doesn't have expenses due to COVID. So fixing equipment, if it's fixing equipment, I would say yes, because it's a repair. Replacing equipment, I would say no, but you will have sales that come in that you can use to pay for those things. So the grant's going to pay for all of your expenses. So any dollar that you bring in sales that you net, you're going to be able to use that for other things. So while you can't, I would not classify this. Let's say it's a $20,000 expense and you have the money right now, just don't count it towards the grant when you go to get the grant forgiven. Don't count it in that bucket, but you will have at least $20,000 worth of sales to offset that. Remember, the grant's paying for all of your expenses. So even if you lose money, it's still paying for your expenses. So you'll have sales that can offset those expenses, those capital expenses. But don't count it in your funds because I don't think it's going to be allowed at the end of the day. All right, so county locations and affiliates. I just want to quickly run through this so that we can get to all of your questions. So the key around counting is you can't have any more than 20 locations. And this is really fuzzy because if you have different businesses, for example, your business has 16 dry cleaners and 5 restaurants, you have 21 locations, you're not eligible for RRF. This is the most bizarre thing I've seen in all of this. They want you to count all of your different entities, unless, of course, it's a holding company for real estate. So you own the building that your restaurant is in. That doesn't count as a separate business under this case, from what they've clarified. But they want all of your different locations. This is a location count. So if you're over 20 locations, then you're not going to qualify for this. That being said, I would absolutely check with your attorney and get a legal opinion on this, because the SBA is not always clear. And if you made a mistake up front and you didn't get the grant, and then they come out and clarify it later, you'll kick yourself. So get a legal opinion and use someone that's very familiar with these grants. So there's some restaurant specific law firms that would be very good to tap if need be in this case, because if you've got over 20 locations, you can definitely afford an attorney. So the last piece of this says for a caterer or a single business with multiple food stands, trucks, or carts, the physical location is where the business is headquartered. So if you had 5 trucks, that's going to be one location. That's important to note because lots of people have different spider legs of their business. For corporate groups, you know who you are. So corporate groups, those are different than affiliated groups, but a corporate group, for example, down at the bottom, an individual owns or controls 16 restaurants, each with separate tax identification numbers and 5 gas stations. You're not going to be eligible. So that's something to keep in mind if you're a corporate group. The next group is the most complicated of them all. So it's the affiliated groups. So we know if you're a sole proprietor and you have over 20 locations, you're not going to qualify. If you're a corporate group and you have over 20 locations, you're not going to qualify. But if you're affiliated, this is where it really gets complicated. So we have a lot of people that are intertwined in the restaurant business that may have investors that own half of this or half of that, but they're all intertwined. So you have to know who your affiliates are. So if you're a group, let's say that you own 3 restaurants and you've got someone else that's a partner in your business that owns, let's say 80% of one of your locations, and they have other businesses as well, those are affiliates. So you've got to make sure that you know all of your investors and that they're in any kind of affiliations that they have. And this can really get you wrapped around the axle. You just have to make sure that you're not, if people, you have to count those intertwining businesses. So when it comes down to the end, you're going to go through when you're filling out your application, you're going to be asked if you have affiliates. And the first bullet point there is you must select yes if the RF eligible applicant entity has an equity interest or right to profit distributions of, listen to this closely, 50% or greater of one or more other business entities. You must select yes if any owner of 20% or greater equity interest of the RF eligible applicant has an equity interest or right to profit distributions of 50% or greater of one or more other business entities. And or you must select yes if the applicant business is a holding company or a management company that owns or manages businesses other than the applicant business, or if the applicant business is held or managed by a company that owns or manages other businesses, you must count these entities as separate affiliates and locations. This one you're going to want to spend some time on if you've got a big enough company to be concerned about having investors that have other companies that could push you over the limit. So this is an area, if you are affiliated with multiple other companies, you're going to have to take a very close look at, and I would get on it right now if you think that you are intertwined in this. It's really complicated, and you're going to want to make sure that you track all this time down, because this is what could hold you up during the application process. Is if you have affiliated businesses and you don't have all of the information for the other businesses or the other individuals, that could be an issue. Okay, so what to have ready before applying. You're going to want to download and practice and build a practice application on Form 3172. That is the application that they have put out. That's a kind of a practice application, and it'll lay out the information that you're going to need as you go through the website and apply on Monday. You're going to want your 2019, and if you have the 2020 tax return, you're going to want to have those. Your 2020 POS report, you're going to want to have a copy of that for each location. 3 current months of bank statements, and there was a little bit of confusion, but I think we've gotten clarity. Just pull January through March. It's going to be too late to worry about getting April. It's going to be too close to the launch date banks won't have it up more than likely by Monday morning, and you don't want to be delayed. So just download January through March 2021 and make sure that that account that you download is not a brand new account that you created just for this. Now, you can create a new account just for this, but deposit the money in your regular operating account and then move it over if you want for easy tracking. So make sure that you can show that you've got a current business, that there are deposits and going in and out of that bank account, that there's checks going in and out of that bank account. That's what they really want to see, is a bank account that's got activity in it so that they know that you're open and that you're operating. For some of you, you've been dormant. You may need to pull older statements to supplement these three as well. So we've had people that have been closed since last March. We will pull those January, February, and March of last year, as well as January, February, and March of this year. And then we will explain with a letter that they have been closed since the pandemic started, and here is evidence of their deposit and evidence that their bank account is still open and they're still operating. You're going to want to have ownership information of owners over 20%. Let's say that you had 20 owners of 5%. You're going to want to make sure that you have at least the information to get over 20% ownership. Some of the banks during PPP wanted you to have evidence of at least, some up to 100%, some of 80%. It's just a good idea to have your cap table if you've got a whole bunch of investors handy in case you need to submit the whole thing. But you're going to want to have ownership. Anybody that has over 20% ownership, you're going to want to have their information. Any affiliated businesses, we talked about a little bit earlier. A letter of comfort, this typically comes from your CPA or your accountant. This will, according to the SBA, speed the processing. So for all of our clients, we're provided that we had their books in 2019 and 2020, we're providing a letter of comfort to go along and explain all of the calculations and show that we have verified the information. And they're going to put a lot of weight in the CPAs and the accountants. So this is kind of our day to show off. So they're going to put a lot of weight in accountants and CPAs and what they say that they verified the information. It doesn't have to have CPA behind your name, but go to your accountant and make sure that you've got a letter of comfort to submit that they've looked over your information. You don't have to, it's not required, but the SBA said it's going to be very helpful. You're going to want to have your PPA loan number and amounts. Now, as soon as you plug in your EIN, supposedly it's going to pull over automatically your PPP loan number and your amounts into the wizard. Just don't count on it in case something's wrong. So they should be able to pull those over automatically, but I wouldn't put any trust in that. It worked really well in the demo, but that doesn't mean it's going to work well when there's 500,000 people trying to apply at the same time. Number 10 there, check the size of your file. You cannot submit files that are greater than 35 megabytes. So most of your, for example, your financials might be 2, 3, 4 megabytes. But if you tried to lump them all into one gigantic file with all the bank statements, your financials, the tax returns, all of those kind of things, you might exceed 35 megabytes. So you're going to want to make sure you check your file size. Again, these are little things that can slow you down. And as the SBA explained, this is first come, first serve. So if you take your time getting this, there's somebody else that is hopping you in the line. It's not when you log in that locks your place. It's when you finish your application that locks your place, and when it's approved that locks your place. So the more information, the more clear you can make your application, the better your odds are of getting these applied. Now, the reason the SBA wants you to apply early is they know they're going to run out of money. They flat out said, we know there isn't enough money for everybody. Followed up by, don't panic. What we want to know in the first 21 days is how much are we short so we can go back to Congress and ask for more money. And the SBA agents have said they've been, Congress has been very amenable to adding PPP, to supporting this. And one of the attorneys that we work with back east said they've got to follow, Congress has to follow through now. They can't just say, hey, sorry, there's winners and losers. There was 28.6 billion. Sorry, it wasn't enough. good for you who got the grant, and sorry for you that didn't. So they can't very well do that. They didn't feel like that was going to be how Congress handles this, but we do want you to get right on it right away. So the site itself is wizard based. So it's got a series of next buttons, a banner across the top that shows you where you're at in your process, a tile along the side that tracks your progress as well. So you can check back in after you've applied and see where that application is in the process. So you're going to want to make sure that you write down your username and your password. And we're going to talk about what to do here real quick. So they estimate that it takes about 25 minutes per location. If you've got 10 locations, you can expect to spend, plus or minus a half an hour on the first one and 10 to 15 minutes on the next ones. But one thing they said is make sure you triple check your work, because you are not going to get a chance to go back and correct it after it's been submitted. So you may be able to withdraw it and start over, but again, you're going to get hopscotched in line. So where to apply? You're going to apply at restaurants.sba.gov, or you can do that through an SBA provided POS provider. In process right now, Toast and Square have a portal that's linked up directly to the SBA. NCR and Clover at this point, I don't know if we have any other, Lex, if you know of any others, let me know, but NCR and Clover are providing advice and coaching to help you get through it. At Toast and Square, there's a direct application. We are not using that necessarily unless we have clients that go over 10 million, because there's a lot of things that didn't get rung in to the POS system, especially over the last year. So we want to make sure that we're accurate, because we don't want to get caught. We have clients that maybe you're missing $700,000 or $800,000 worth of sales in 2020 that wouldn't count against the grant amount. So you might get too much money if you just used your POS company. So not everything was going through POS, especially in 2020, but we had a lot of third-party platforms that perhaps sales didn't flow through automatically into the POS. So be very, very careful around using your POS company. Smaller operators that didn't do a lot of activity outside of the POS, perfect. Go straight through. If you use Toast, if you use Square, you can go straight through them. They'll help you. It's a great way to get through. It's streamlined. They're not necessarily saying that you're going to be preferred. It's not preferred that you go through this platform, but they are saying it will speed the process up. And then for those of you that don't have internet connection, you can also call in. Just understand it's probably going to take longer to process your items, because you've got to do everything by hand over the phone, and then you're going to have to be faxing or sending emails. It's going to take longer for that, but I personally am very glad to see this, because there are a number of people that really just aren't very sophisticated around technology, or may not be sophisticated around technology, or may not have good internet. So they have an option. And let me tell you, if you have questions, call that 844 number. They've been very responsive and very helpful. So don't shy away from calling them. If you have a question, go straight to the SBA. You don't need to ask another expert. Call them. If you can't get a hold of them, then ask another expert. But do not shy away from calling the SBA. They've been extremely helpful. They seem to be really well staffed at the moment. Of course, the game changes on Friday. So register Friday morning. The SBA, restaurants.sba.gov opens up at 6 a.m. Pacific, 9 a.m. Eastern on Friday morning. So make sure you get your registration done on Monday, by Monday morning, because you don't want to be messing around with setting up your account on Monday morning when the program is already launched. So make sure you register. Friday is my preference, but no later than Sunday night. Make sure you're registered. And the reason that you want to do that is they're going to set up second factor authentication, two-factor authentication. So you know how if you go to log in your bank, they send you a code on your phone, and you'll plug in that code, and then you'll be authenticated. And they're using two-factor authentication for this process. They're also going to ask potentially some public information, such as which street did you grow up on when you were a kid, and some of the other information. We don't know what they're going to ask yet, but they are going to ask some of those questions that you might get to identify you. They're very, very concerned about fraud in this process. So they are going to ask you more authentication questions and make sure that you're present to do that. So if you're an owner and you have somebody that typically helps you, an accountant or something like that, you're gonna want to be with that person or on the phone. But my recommendation is you do it yourself, or an authorized agent that can sign on behalf of the company fills out the application, because every minute that goes by, somebody else is jumping you in line. There's 500,000-600,000 restaurants in the United States, and I'd say, probably 400,000 or 500,000 of them are going to apply for this. So time is of the essence. So applications open at restaurants.sba.gov on Monday morning at 9 a.m. Pacific. So the SBA says apply day one, minute one. I say good luck handling that traffic. They think they have their site optimized. They're using the PPP portal. They're not using the EIDL portal or any other portal. They're not using the Shuttered Venues Act portal that's been, was down for over a week. And they've got a new portal just to handle this, and they feel like they can handle the traffic. So we'll see, but be very, very patient. Don't give up. Don't stop until you're done. So don't walk away. Don't throw your hands up. If you have to sit there until midnight on Monday, sit there until midnight on Monday. You've got to get it done. You've got to get it in. The Johnny come lately to this of, hey, I've got 22 days before I have to apply. Not true. Apply day one, regardless of your size, regardless of your status. Day one, minute one, be up and ready to go 9 a.m. And hopefully you can get on there, but be patient, because if everybody's jumping on that site, I'll just block you out. So they're going to be processed on first come, first served. I've said that a million times on this call. They expect once those applications are approved that you'll get funded in about 14 days. So make sure you've got your bank account information handy and use a modern browser. So Chrome, Edge, Safari. Don't use Internet Explorer. It's not going to work. Don't use anything that's outdated. So make sure that your browsers are up to date and that you use a modern browser. So additional resources, I really encourage you highly to go to the Restaurant Revitalization Funding Program Guide. The link is on here, but that's on the SBA site. So you're going to want to go there. You're also going to want to go and read through the Restaurant Revitalization Fund knowledge base. So this replaces the old FAQs that they used to have that they put out via PDF, and they'd publish every now and then. So this is a live thing. There's 38 articles under technical help. Those are things that are going to help you navigate the website. There's currently, right now, as of this moment, 95 articles on questions such as, if our PPP loans exceed the difference between gross receipts in 2019 versus 2020, do we still qualify for any funds? The answer is no in that particular case, but you can get those straight up answers directly from the SBA on that knowledge base. So it's a fantastic resource. We've been using it since day one. Very, very helpful. So make sure you check that out. All right,
Okay.
questions?
All right. I will say that Rick will be sharing his slideshow with us, so we can post this online with the video once we get it up online, probably this afternoon or early tomorrow. Just go to hub.wahospitality.org and click on the video and webinar tab, and you should see it there. Okay, our first question is, as a franchisee of a franchisor listed in the SBA franchise directory, do I need to get and submit the SBA form 2462 along with my application? Or if the franchisor is listed in the directory, does that fulfill the requirement for the form 2462?
I believe so. There's a piece of the website where you drop in you're going to drop in, for example, your bank account, your bank, and it'll find your bank routing numbers and all of those kind of things. But there's also a piece for franchisee. So they should identify the franchisor through the wizard, but I wouldn't count on it. Again, belt and suspenders here. Make sure you get whatever information that you can, but at least the site that I saw around franchises, it did drop in that information.
All right, and the next question is, please clarify on calculating the grant under not open yet. Eligible extensions at date of application. Would owed salaries, worker ineligible for unemployment, and past unpaid rent be admissible?
Well, I think it's a great question, number one. If you haven't paid it, that's a little bit tough. But you could certainly try around that. If you've got, let's say that you didn't pay the rent that was due, I suppose, let me just go back to that. The language is, it's eligible expenses at date of application, but how they've treated eligible expenses at this point is if those expenses have been incurred post March of 2020, they would be counted. So I'm not exactly sure on this one, but I would call the SBA to get clarity. I suspect that things that are owed, that you owe, in other words, you could get sued for not paying them, those would be eligible expenses. Anticipated expenses are not going to be, but things that you owe, I believe, are going to be. But again, check with the SBA, but I think I'm right on that.
And you've been answering a lot of questions about this lately in your business. Can you tell me what is the number one question everybody's been asking you lately about the RRF?
Well, we have a lot of restaurant groups. So our biggest questions have been around affiliations, which doesn't fit the vast majority of restaurants. That's been the most complicated question that we've had. The most common question that we've had over the last several days has been, when is everything open? So thank God we've got clarity on that. And then obviously, how much am I qualified for is the next thing. We're currently working on all of that, because you can't just pull it straight out of the POS. You can't just pull it straight off your tax return. There are other factors that you may want to include. So those are the top questions that we've gotten. How much am I going to get? Which we answer with, we don't know yet, but we'll know shortly, because we don't want to shortchange anybody or set them up, but we have a ballpark that we know.
Rick, what are the biggest areas of confusion? Before this call, you and I were talking about how you were part of other webinars, and sometimes people would have different perspectives, whether it's within SBA or outside of SBA. What has been the biggest area of confusion that you think might need some clarification on RRF?
I think the biggest area one of the biggest areas of confusion is around this piece. Second piece is around the information that needs to be gathered. So tons of questions around which bank statements do I pull? Well, it's pretty simple. Just pull January, February, March. And that literally changed by 3 different agents. And we finally just called the SBA and they said, just take the most current ones, the most current 3. So January, February, March, that's the most common thing that there's been. It's really around what information to supply that's had the most confusion. But if you kind of stick to your knitting, the website, as I mentioned, the website is really, really helpful. I was really impressed when we walked through the website, because it's very friendly and it answers a lot of questions for you, and it's wizard driven, and it's drop in the information as you go. Just be ready to go with your calculation. So have all of your numbers in front of you, so that when you go to apply, you can just drop them in.
And for those of you listening on the podcast, we link to all of these sites that Rick has mentioned. Just go to hub.wahospitality.org and click on the RRF toolkit, and this should all be available from there, as well as this recording of this webinar.
And let me clarify number 9 on this particular slide, the PPP loan number and amounts. A lot of the big banks didn't provide the loan numbers. Yeah, you can get it from the SBA if your bank won't give it to you, but they had an internal, a lot of the big banks had internal PPP loan numbers that were masked. And the way they tell the difference is your PPP loan number should have 10 digits, not 9, not 8, not 12, 10 digits. So you may or may not have gone through this the last time that you went to get your PPP loan, but if you went through your lender that did the first PPP number, just verify that you've got the right PPP loan numbers and they are 10 digits, because the large banks, their loan numbers are not 10 digits. They're 12, they're 9, they're 8. So you will know if you have your right number, if it's a 10-digit number, but verify it with your bank. Very important. So you know, if you plug in that loan number, you want those amounts to come up. But like I said, the SBA is claiming that they've got this information, and as soon as you plug in your EIN, it's going to bring up, it's going to autofill these cells. I just don't know if they can pull it off.
We have a couple more questions, and I believe these are both the same question. For a company with multiple locations but a single EIN, is it one application submitting tax return for all locations, then submitting POS statements for each individual location?
Yeah, so that'll be a corporate group. It's going to be submitted under one. You know, if you have one tax return, follow the tax return, and you'll want the supporting documentation that supports those numbers. So if your 2020 tax return isn't done yet, you're going to want to calculate those as a corporate group and then supply your supporting information that supports those numbers that you're asking for the grant for. But the corporate groups are going to be the easiest because you're not going to have to go through the wizard for each individual LLC or whatever it is. It's just going to be the one corporate group. So one application in that case. Some people may not have a corporate group and they need to have 9, 10, 11, 15 different applications. But under the single, when you sign on, you'll hit start a new application. When you're done with your first location, if you're not a corporate group and you have multiple locations, you would hit start a new application again. So you can do them all inside. Don't log out. You just go back and start a new application for number 2. Start a new application for number 3. Start a new application for number 4. But they are not going to need to be individually applied for as a corporate group, as far as we know at this point.
And with that, thank you both, Rick and Lex, for another informative webinar, and we will see you next month.
My pleasure. Thank you.
Mhm.